Hello, Junior Achievement students. This is Chris Wolgamott from Meritrust Credit Union. And today we are going to be talking about credit reports, what they are and why they're important. Before we do that, let's see if we can review what we've talked about in the past. In the first lesson, we talked about self-knowledge, knowing your interests, knowing your values, and knowing your skills so that you can align them to get a good job. In the second lesson, we talked about goal setting and why goal setting is important and how it can be accomplished. In the third lesson, we talked about budgeting and that budgeting is your income minus your expenses. In the fourth lesson that we just talked about, we talked about payment methods. Payment methods could be cash, it could be check, it could be a debit card, it could be a credit card, or it could be a personal loan. And if you use cash, check, or a debit card, that is your money that you're using. And if you use a credit card or if you use a personal loan, then you are borrowing money that you have to pay back at a later period of time. Today, we're going to talk about credit reports and credit scores and why they are so important. Now, a credit report keeps track of all of the different loans that you have borrowed in the past and lets lenders like a bank or a credit union know how well you paid them back. It establishes a pattern or a history on how well you've done at paying people back. Your credit score is a standardized score that banks and credit unions use to determine how responsible you've been at paying loans back in the past. So you might have a 700 or an 800 or a 600 credit score, and that tells me as a banker how trustworthy you are with borrowing money. Now, your credit score can range down from 350 up to 850. The lower your credit score goes, the more risky you are for us to lend money to. And the higher your score goes, the better off we are lending money to you because it means that you will probably pay us back the higher that score gets. So let's look at it this way. Let's say that you have two friends. You have one friend that comes and borrows $30 from you. You have another friend that also wants to come and borrow $30 from you. Friend A has always paid you back in the past. Friend B has really struggled to pay you back in the past. They might still owe you money from something that they've already borrowed before and still haven't paid you back yet. Now, which friend are you more able or maybe more apt to allow to borrow money? Friend A, who has always paid you back, or friend B, who has really struggled. Now, this is your money that you're letting them borrow. That's how banks and credit unions operate. We have credit reports and credit scores that tell us how people have done in the past, and that allows us to make good financial decisions with who we allow to borrow money. Now, there are 3 different credit bureaus that record your credit score and give you a credit report. They are TransUnion, Equifax, and Experian. Now, a lot of times when you get a loan, we will only look at one of those 3 credit bureaus, depending on who the bank or credit union uses to do such things. But if you were to buy something like a house, we're going to look at all 3 of those credit bureaus to make sure that we know that you've been responsible with every single person that you've borrowed money from in the past. Now, why is it important to you to know these things? Well, you might not need to borrow money now as a student, but when you become an adult, you might need to purchase a car. You might want a credit card. You might want to purchase a home. And all of these things would use a credit report to let us know how responsible you are with borrowing money before we let you borrow more money. So it's very, very important that you make wise financial decisions, that you borrow money appropriately, and that you pay people back on time. That will help you establish better credit. And if you have better credit, that will open up more opportunities for you down the road. So credit is something that is important as you get older and as you need to borrow more money. Thank you so much for watching today. You are going to have an activity that's going to deal with keeping score. I hope you enjoy your activity. I hope you pay attention. And I hope you learn something from these different financial literacy videos that we're doing for you. Thank you so much, Enjoy your day.